How to get your finances under control. Hi there, it's Luigi and welcome to Catapult Capitalism, your guide in making smart financial moves for your future. If you enjoy watching our videos, feel free to like, subscribe, and hit that notification bell so you get updated whenever we upload a new video. In today's video, we are going to share with you some ways to get your finances under control. So if you dig these kinds of videos, then keep on watching. Are you always juggling expenses and barely making ends meet, let alone saving money for a rainy day? Do you fear that an unforeseen expenditure, such as a vehicle accident, may force you into bankruptcy? If so, it's time to take charge of your financial situation. You may give yourself some breathing room in the near term and a chance to pull ahead in the long run by getting your money under control. Controlling your money might feel onerous when you're attempting to make ends meet on a shoestring budget, but doing it one step at a time makes it much easier. Here are some ways you can get your finances under control. 1. Make a budget. If you are having difficulty managing your funds, the first thing you should do is create a personal budget. Divide your monthly spending into categories such as food, rent, and utilities, and budget for each. Non-monthly regular costs such as a yearly parking permit or a quarterly water payment should not be overlooked. Add up all of your recurring costs and split the total into 12 equal chunks if you're doing it yearly or 3 equal chunks if you're doing it quarterly. Put that amount aside in your monthly budget to meet these expenditures when they arise. Budgeting gurus frequently advise you to pay yourself first. Set money aside for your savings objectives before you pay for anything else. But what if you don't have enough money to meet all of your bills as well as your savings? Then comes the hard part, figuring out how to cut back. 2. Reduce your expenses. Begin by searching for methods to save money on indulgences such as dining out or entertainment. Among the options are canceling your club subscription and exercising at home, switching from cable television to streaming video, and getting rid of costly, unhealthy habits like smoking and gambling. However, don't strive to fully eliminate luxury. Being overly hard on oneself might lead to financial failure. So to prevent thrifty tiredness, allow yourself a few inexpensive indulgences. If your budget is still unbalanced, move on to the major issues. Reduce your home costs by moving or refinancing your mortgage. Purchase a less expensive mobile plan. Look for methods to save costs in areas such as childcare, healthcare, food, and utilities. You may even become a one-car household or go car-free. 3. Build your savings. Everyone should have an emergency fund. Having money set aside means you won't have to rely on credit card debt to meet unexpected bills. To begin your emergency fund, set up an automated savings plan that directs the savings money you set aside in your monthly budget to separate high-yield savings accounts that you cannot access. Alternatively, invest it in low-risk investments with a little higher yield, such as municipal bonds. Investigate strategies to save an extra $1,000 quickly to jumpstart your savings. A $1,000 cushion covers many unforeseen bills and gives you peace of mind. 4. Establish your financial goals and develop a financial plan. Your emergency savings account is not the only form of savings you require. You almost definitely have additional long-term financial objectives. Retirement, college funds for your children, debt repayment, a new house, a car, a trip, or a wedding are all examples. Because everyone's financial goals are unique, start by establishing your top priorities. Then calculate how much money you'll need for each objective, as well as your timetable for achieving them. Based on these calculations, you'll know how much to set aside each month for each savings goal. 5. Begin investing. If you keep your money in a savings account, it will not grow fast enough to achieve all of your financial goals. Bank accounts today hardly generate enough interest to keep up with inflation. To get ahead, you must begin investing. Use your employer's retirement plan, such as a 401k, to save for retirement. Automatic withholding makes it simple, and employer matching provides free money. However, be sure you're investing enough for your age and selecting the greatest assets for your strategy. If you don't have a workplace account, consider a Roth IRA or a solo 401k. Make an asset allocation strategy to select how to invest your money. Based on your age and risk tolerance, choose how much to invest in stocks, bonds, and other assets. 6. Pay your debts. Debt is a waste of money in your budget. The sooner you get rid of it, the sooner you can go forward. Long-term debt isn't ideal since it might cost you more money in interest and impede your progress toward your financial goals. At the same time, you can't afford to put off saving. When determining whether to pay off debt or save money, a balanced approach that incorporates both may be the best solution. 7. Always pay your bills on time. Late payments exacerbate debt concerns. They add late fees to the interest you already owe and harm your credit score. There are various methods for ensuring that you pay your bills on time. You may set aside one day a week, say every other Monday, to go over and pay all of your bills. You may set up reminders for when your bills are due. You may also make things easier by setting up an automated bill payment. 8. Increase your earnings. When you're already on a tight budget, it might be difficult to minimize costs. To increase your savings, approach the issue from the opposite side by raising your income. You may sometimes improve your salary quickly by altering your tax withholding. You may also enhance your primary job earnings by working longer hours, requesting a wage raise, or seeking a promotion. If none of these options work, look for new employment that will give you more earnings and benefits. You may also supplement your income with side employment or side hustle. Tutoring, being a rideshare or delivery driver, and selling on eBay are all popular side business ideas. 9. Review your insurance. Most crises may be covered by your money. But insurance protects you from financial disaster in a true catastrophe. Everyone needs health insurance, and depending on your circumstances, you may also require auto insurance, house insurance, or life insurance. Examine all of your insurance to ensure that you have adequate coverage for your requirements. Consider boosting your deductible or deleting certain extras to cut your rates at the same time. Finally, create a house inventory in preparation for insurance purchasing. Make a list, record a video, or take images of everything you own. It will act as documentation of what you need to replace if you ever need to file a claim. 10. Keep an eye on your credit score. Your credit score influences your future potential to get loans. A solid credit score is a key to getting the best loan rates. A low credit score, on the other hand, may prevent you from purchasing a home, obtaining insurance, or even finding work. Because your credit score has such a large impact on your life, it's important to understand what it is. There are various ways to check your credit score, some of which are free. Consider using a free or paid credit monitoring service to help you keep track of your finances. Once you've determined your credit score, search for strategies to increase it. These include correcting inaccuracies on credit reports, paying bills on time, and paying off debt. 11. Monitor your net worth. Another important indicator of your financial health is your net worth. This figure is just the amount of all your assets, your house, vehicle, and money in various accounts, less all of your obligations, such as credit card debt and college loans. Tracking your net worth over time provides you with a big picture view of your financial situation. You may use a paper chart, spreadsheet, or financial software to do this. Seeing your debt diminish and your assets grow in front of your eyes is a terrific motivation to stay dedicated to your budget. 12. Discuss money with your significant other. Your love relationship can also assist you to reach your financial objectives. They can, however, also make it difficult for you to make progress. If you're trying to save money and your partner is continuously looking for ways to spend, it can strain both your finances and your relationship. That is why it is critical to be honest with your spouse about your financial situation. Inform them about your financial condition, including your income, assets, obligations, spending priorities, and long-term objectives. Also, request that they share the same information with you. Being on the same page with your finances might help you prevent money squabbles later on. And that's it for this video. If you enjoyed it, don't forget to like, subscribe, and hit that notification icon so you get notified when we upload a new video. Thank you so much for tuning in to Catapult Capitalism, and we'll see you later.